Hello guys, welcome to today's teachings. I'm so happy to have you guys in today's lesson. Okay, so this is Melody FS Academy, and if this is your first time of visiting this channel, coming across this video, please do well to subscribe to this channel, like this video, and if you don't understand any of the concept, or there's a particular topic you are struggling with in terms of institutional trading, you can leave a comment and I'll do well to attend to it. Okay, so in this video we are going to be looking at intraday order flow and understanding the daily range. Okay, so let's get down to today's business. Okay, now prior to every new trading week, okay, we always talk about getting our directional bias. Okay, and if you have been following me for some time, you know that prior to all this move, we talked about it earlier. Okay, so I talked about this low getting uh sucked in. Okay, prior to this move happening, I made a video on one of our last video. We talked about this low uh getting squeezed, okay, getting smashed out. Okay, and I was also looking at this low to be taken out as well, but it seems kind of created a what is it called, created an equal lows. Okay, but we have this old low taken out right here, which caused the reversal on this weekly candle. Okay, so this is we are currently on a weekend prior to Sunday's opening. Okay, so this is how I look at the market, rather this is how we look at the market from a top down analysis perspective. Okay, so if you are not familiar with how we walk down from the weekly time frame to the 1 minute time frame, you can as well check out some of the old videos on this channel, probably the videos on elements to a trade setup. You will understand why and how we walk down from the weekly time frame down to the 1 minute time frame. Okay, so I'm not going to talk much on directional bias, how to get your directional bias on a weekly basis, on a daily basis. I'm not going to talk much about it on this video. Okay, probably I've made some past videos that talked about getting your directional bias, your weekly directional bias, your daily directional bias, and your order flow. Okay, so we are just going to this video is going to be like mainly on focusing on the point that you understand how to get the directional bias. In other words, this video is going to be mainly focused on order flow, and it's going to be mainly for those that have understand the concept on how to get directional bias. Okay, so we are just assuming that right now, you watching this video right now, you know how to get your directional bias. But if let's say you are not yet able to get your bias on a daily basis or on a weekly basis, you might want to check out some of the old videos that I have done in the past that talk about how to get your bias for the week. Okay, so before this move happened, I actually talked about this low getting smashed out and sell side liquidity getting attacked. Okay, so we talked about this even before this whole move happened. Okay, price is still currently bearish right now. Price is still currently bearish, but we are seeing a retracement upwards, and I'm kind of looking at this old high getting taken out. Okay, getting smashed out. and price is currently trading at equilibrium. Okay, so the best premium, or the nearest premium array that price can easily trade off from, uh, if price is going to expand lower at all, it should be at this old high. Okay, so I'm still watching this old swing low getting smashed out. Okay, but right now we are currently retracing inside of this trading range. Okay, and price is currently at equilibrium. So prior to this new week, we might likely see price trade up and attack the buy side liquidity resting above this old high right here, this old swing high. Okay, so we are still going to stick, although we are bearish, but we might want to see some bullish move. Right now you can say we are bullish we are on a short term bullishness. Okay, from short term kind of bullishness should be expected in this new week. Okay, price might likely just reverse and keep expanding higher, but we are still very bearish right now. So trading above this equilibrium, we might likely see this old high getting smashed out. Okay, once this old high gets smashed out, and that will likely be a break of shift in market structure. But let's just see how it goes. Okay, let's just see how it goes. So now that is that for that on the weekly time frame. Okay, so what we use the weekly time frame to do is to get our directional bias. Okay, and I've talked about it number of times on how we use the weekly time frame to frame our directional bias and get our daily setups. Okay, our order flow. So I'm not going to talk much about it, but I have previous videos that are going to help you to understand the concept of getting your directional bias. Okay, so let's get down to the business of the day. Now this is the daily time frame. Okay, this is the E-mini Nasdaq futures contract, March contract. Okay, now we are going to be looking at order flow. Okay, this is that old weekly low that got smashed and taken out. Okay, this is that old weekly low that got taken out. So before this actually happened, I made a video last week. Okay, that I was expecting this old low to get taken out. Okay, to the sell side liquidity resting below this old low to get taken out, and which is exactly what we saw right here. Okay, so now price started retracing inside the weekly range. Okay, so although we are currently bullish on the daily time frame, as you can see price just breaks structure to the upside. Okay, so we are currently bullish on the daily range. Okay, so we might likely see this old swing high that has sell-side liquidity resting above it. So price is currently drawing to this, and remember we are currently at equilibrium. Okay, so price, and what is above equilibrium is premium. Okay, so price is currently trading into the premium sector of this range, and we have this old high with buy side liquidity resting above it. Okay, so this is what is currently drawing price upwards. Okay, so we want to see the buy stops resting above this old high to get smashed out. Okay, so we are currently bullish on the daily time frame. Okay, so I'm expecting some move above this old highs. Okay, so now we are going to talk about order flow. Okay, so we are uh, in this lesson we are anticipating that, okay, we are going with the fact that you watching this know already knows how to get your bias. Okay, so let's say before this move happened that you were able to, we are going with the assumption that you were able to detect or analyze that expecting higher prices. Okay, so we are going with the assumption that you knew that price was going to be bullish from this trading day upwards. Okay, what I'm trying to say is that we are going to pretend that he knew that price was going to reverse from here, that you were expecting higher prices from this low. Okay, so that's what we are going to pretend here right now. Okay, so just in case you don't know how to do that and you don't know how to get your buyers, you might want to check out some of the old videos on this channel which talk about getting our directional buyers. And I'm still going to make some more future videos on it. Okay, so now let's go with the assumption that you knew that price was going to reverse from here after attacking the sell side liquidity. Okay, so we are expecting bullishness. Okay, so now we are expecting bullishness, which means our directional bias is bullish. Okay, so now this is the previous week that just closed. This is on Fridays, this is on Fridays, this is Thursday, this is Wednesday, and this is Tuesday, and this is Monday. Okay, so now we always start our trading week from on Tuesday. Sorry, we start trading. We start trading on every week from a Tuesday. Okay, so now let's get down to on Tuesday's price action. Okay, so now I have some time of the day marked out right here. Okay, these are the time of the day that you might want to take note of. Okay, so you are going to take note of this time of the day. Now this is for the futures market. Okay, the time of the day, this time of the day is applicable to the futures market only. Okay, when you are looking at the forex markets, we look at different time of the day. So this is the one you probably want to take note of if you are probably interested in this asset class. Okay, so now the time of the day you want to take note of is the New York midnight open. Okay, the New York midnight open, the 8:30 a.m. New York time. This is 8:30 a.m. New York time. Okay, so we actually start our trading for the day from 8:30 a.m. New York time, and we start our trading for the week from on Tuesday. Okay, so we start trading from on Tuesday. Then this on the day of the week, for the day of the week, is applicable to forex and futures market and any other asset classes. Okay, we start our trading from on Tuesday. Okay, so now we start from on Tuesday, and we start the trading for the day from 8:30 a.m. New York time. Okay, so between 8:30 a.m. to 12 to 11 o'clock. Okay, we actually look from 8:30 a.m. to 11 o'clock. Okay, that's where we hunt for our money session trade, but probably you can extend it to 12 o'clock noon, 12 o'clock noon New York time. So this is 12 o'clock noon to 8:30 a.m. So between this time window of the day, this is where we start. This is when we start hunting for our money trade. Okay, now between 12 noon to 1:30 in the to 1 o'clock, sorry, to 1 p.m. in the afternoon. Okay, this is known as New York lunch hour. So we don't take any trade. You don't take any trade within this 1 hour time frame. Okay, now we resume our afternoon trade from 1:30 p.m. Okay, we start our afternoon. We start hunting for our afternoon trades from 1:30 p.m. Okay, so this is when you start hunting for your afternoon trade. Okay, so now what we are going to look at right now is how you frame your daily how you frame your charts. Okay, how you frame your chart when you go trading daily. Okay, this is how you frame your charts on a daily basis. You set your chart to this specific time of the day. Okay, set your chart to this specific time of the day. All right, so let's do some marking on the chart. Okay, now this is that old low. Okay, this is that old low that got smashed through. Okay, this is that old low right there that we are anticipating price to reverse from. Okay, this is the sell side liquidity being taken out right here. Remember, we start our hunting for our morning section trade from 8:30 a.m. and all this happen prior to 8:30 a.m. Okay, so this is our 8:30 a.m. New York time candle right here. So this is the candle that opened up at 8:30 a.m. Okay, so all this move happened prior to 8:30 a.m. So now after the 8:30 a.m. okay, the next thing we are going to do is to anticipate some levels of stop run on sell side liquidity or buy side liquidity. Okay, so now the two things you are going to do prior to it, or rather the two things you are looking for prior to 8:30 a.m. New York time. Okay, you are anticipating some, you will be looking for some levels of run on liquidity, or you look for displacement in the marketplace. Okay, so you are looking for one of two things. You are looking for some level of run on liquidity on stops, or you are looking for displacement. Okay, so one of these two things is what we are looking for. So now this is the New York 8:30 a.m. opening. Okay, this is our opening, 8:30 a.m. candles open. Okay, now what we are going to do, you combine this with your directional bias for the day. Okay, our directional bias is obviously bullish. Okay, so now, and I can't stress this enough. I've always mentioned this in my previous videos that if you are anticipating if you're anticipating higher prices, what you want to see is, you want to see some run on uh, on sell side liquidity, on sell stops. We want to see some runs on sell side liquidity. Okay, that is what we want to anticipate, and which is what we have already seen here. Okay, this is sell side liquidity getting smashed, getting squeezed, getting taken out. Okay, so now and this happened prior to 8:30 a.m. so we were not in this move. Okay, this whole move happened without us. Okay, so now we are currently at the 8:30 a.m. and we are assuming that we just pull up our charts for the day. Okay, now this is what we are seeing currently on, this is the price action we are seeing currently, and none of this has happened yet. Okay, none of this has happened, just ignore this. Okay, now so what we are going to do, combined with the fact that you are expecting bullishness, we are expecting bullishness, we are expecting higher prices. What we are going to do, we are going to look for one of two things. Okay, we are going to look for sell side liquidity be taken out or displacement. Okay, so we are looking for sell side liquidity be taken out or displacement, and as you can see, so prior to 8:30 a.m. we are going to look for a swing low or an old low to get taken out. To you're going to look for sell side liquidity, you're going to look for an old low, for price to take out an old low. Okay, so we are going to look for some run on sell side liquidity, and as you can see, obviously there was no run on sell side liquidity, there was no run on there was no old low taken out, and which is obviously what you can see right now. So there was just a break of market structure. Okay, there was just a break of market structure to the upside. Okay, as you can see, price break structure upward. Okay, breaks structure upwards, and came back and created this right here. This right here is called displacement. Okay, remember, we are looking for one of two things. Okay, we are looking for either an old low to get taken out for bullish prices. Okay, for higher prices, we are looking for an old low prior to 8:30 a.m. okay, prior the first swing low prior to 8:30 a.m. if you are anticipating higher prices. The first swing low prior to 8:30 a.m. we are looking for price to trade below it to grab sell side liquidity, and that is where we can anticipate our entry. But in this scenario, in this case, this is the first swing low prior to 8:30 a.m. opening. There was no attack on the sell side liquidity. Okay, there was no attack on the sell side liquidity, so we scrap that. So as you can see, prior to 8:30 a.m., there was no attack on the sell side liquidity, and but what we can see here is displacement. Okay, price was currently expanding after taking out this old low. Okay, after the sell side liquidity be taken out, price was expanding upwards, and price broke structure here, right here. So this right here is displacement. Okay, this is displacement. Okay, so now it meets one of our criteria. Okay, so remember we were looking for two things to happen. Okay, we are either anticipating some major run on sell side liquidity, or we are looking for displacement. Okay, so now obviously, as you can see, there was no run on sell side liquidity. Okay, but there was displacement. Okay, and now combined with the fact that we are close to the opening candle for the day. Okay, this is the uh 12 o'clock a.m candle that opened up on Tuesday's trading day. Okay, so now what we are aligning, what the factors we are aligning together that is making this entry to be a high probability setup for us are the fact that we have the fact that sell side liquidity has been taken out. Okay, we have sell side liquidity be taken out right here, and our directional bias, we know we are currently bullish. Okay, we are expecting higher prices. Okay, so now sell side liquidity has been taken out, but we were not in this move. Okay, when this happened, we missed this whole move right here, down here. Okay, so now price is currently expanding. Okay, now this is the opening candle of the day. Okay, this is the candle that opens up the day. Now for our bullish day, our high probability setup for entry rather will be for buy days. Okay, for bullish days will be below the opening candle or close to the opening candle. Okay, so your high probability entry for bullish days will be below, you will be looking to buy below the opening of the candle or close to the opening of the candle. Okay, the opening candle that opened that particular trading day. Okay, so that will be your high probability setup. So these are the factors aligned together. Okay, these are the factors that we have aligned together so far. Okay, now price is currently expanding, and there was a kind of retracement here, and as you can see, this is an old low. Taking this out in time, it looks like a kind of resistance level. So buyers are going to try to short this. Okay, so they went short here, and price was kind of retraced a bit and smashed through. So this right here is known as displacement. Okay, this right here is known as displacement, and this right here is known as displacement. Okay, so price created what, this is our fair value gap. This might not be much on this 15-minute time frame. Okay, this might not be much on this 15-minute time frame. So let's drop down to our next time frame, our next lower time frame, which will probably be the 5-minute time frame. Okay, now this is the 5-minute time frame. Okay, this is the opening candle of the day. Now this is that break of market structure. Okay, price, this is that supposed resistance level. Price bounced off it and smashed through aggressively, creating a displacement in the marketplace. So this right here is displacement. Okay, so now price created a fair value gap. You can see between the high of this candle and the low of this candle, there's a gap. So this is our sniper entry, this is our entry right here. So our entry will be right here, and our stop loss will be down here. And as you can see, price traded off a bit and came back. If you have placed, let's say you placed your stop loss too close at the exact low of this candle, you might probably get taken out, which is why it's advisable on placing your stop below an old low. You should give it a kind of breathing gap a bit. Okay, a breathing gap a bit. So let's assume you were taken out here. Let's assume you placed your stop too tight and you got taken out here by spread or things like that. Okay, this would have been your next entry. Okay, price broke structure here, and dropped down and created this fair value gap. Okay, this would have been your next entry, possible entry. Okay, so as you can see, let's go up again. The factors that we align together to make this entry a high probability setup are: the first fact is that we are expecting higher prices. In other words, we are bullish. Okay, our bias is bullish. Okay, now, and we have traded below an old low, taking out the sell side liquidity. Okay, price took out the sell side liquidity. Okay, we traded below an old low, and we are currently below the opening candle for the day. Okay, or we are currently close to the opening candle of the day. Okay, we are currently close to the opening candle of the day. Okay, so price is currently expanding upwards. Price created a kind of short-term high, kind of manipulated, engineered resistance. Okay, this was a kind of engineered resistance, so sellers are going to try to short that. Okay, because this looks like an old resistance level, so it bounced off a bit and smashed through. Okay, creating a displacement in the marketplace. Okay, creating a displacement in price. Okay, so now you can see the next candle after this created a gap between created a fair value gap. Okay, so now dropping down to our next time frame, as you can see right here, this was where we got in, and if you have placed your stop loss too close to the low of this candle, you would have probably gotten taken out right there. Then your next entry would have been here. Okay, your next entry would have been here. Price expanded upwards, break structure, break structure on this candle. Okay, once it close, we look at it, we'll go down, and as you can see, the fair value gap, and we got in right there. Okay, now for our TP, what I just did was, I took this old low, because this is this low, this high, sorry, I took this old high, very clean highs, and I got out right there. Okay, so you can see I got out right there. So that is for our morning session trade. Okay, so now the next thing you might want to consider taking down is the fact that if you have a trading morning, okay, let's say price, you got a trending morning session, your afternoon session might likely see reversal or continuation. Okay, so let's say your morning session, your morning trend was was bullish, was trending. Okay, the trend, you got a trending morning session. Okay, so you should probably expect your afternoon to be either a retracement or a continuation. In this case, what we got was a continuation. Okay, so let's say you got a consolidating morning session. Okay, if you got a consolidating morning session, what you probably want to do is you are going to look at the previous trend. Okay, if it was bearish, the consolidation may be likely a reaccumulation to to go short or reverse. Okay, so you want to keep that in mind. If you have a trending morning session, in your afternoon session might likely reverse or continue the morning trend. Okay, so now that is for our morning trade. Okay, now this is our afternoon session trade. Probably up to if it was up to me, I don't, you know after my money, if I let's say I was able to get an entry in the morning trade, I don't normally do the afternoon trade. Okay, I don't normally go looking for more setup in the afternoon. I just, once I get an entry from my morning session, that's it, I'm done for the day. Okay, but let's say you want to trade the afternoon session, so what you are going to do is we start our afternoon session hunting from 1:30 after the New York launch hour. Okay, so this is the arrow, this is the candle that opened up to 1:30 in the afternoon. So we start our afternoon trading from 1:30. Okay, so as you can see, this is the 1:30 opening candle. Okay, Now what we are going to look for, we are still very much bullish. Okay, remember we are looking for one of two things. We are looking for if we are currently bullish, okay, if we are expecting higher prices, we should see some level of sell side liquidity being taken out, or we should see some displacement in the marketplace. Okay, so now what you can as you can see here, prior to 1:30 a.m. 1:30 p.m. sorry, we look for an old low to get taken out. Okay, so this is the first swing low prior to 1:30 or exactly at 1:30 p.m. Okay, as you can see, price went down below to grab liquidity. Okay, price grabs liquidity right here. So let's go down to our next time frame. Okay, so this is that old low at 1:30 p.m. Price trades below, grabs liquidity, and start expanding higher. So we got a break of structure or shift in market structure right here. Okay, so price shifted bullishly and we got our fair value gap. This was our entry, our stop loss below here. Okay, so now this I took this old high, and as you can see, that was such a beautiful entry and exit right there. Okay, so now I hope you have been able to get some insight from this video. Okay, so doing a quick recap on this on what we have just learned. Okay, so you should be able to determine your daily bias. Okay, you should be able to determine your daily bias. Then you should have your the specific time of the day on your chart. Okay, you should have specific time of the day on your chart, which are 8:30 a.m., 12 p.m., 12 noon, 1 1 o'clock in the afternoon. Okay, which will be your New York rush hour. Okay, this is your New York rush hour, uh, also known as no trading hours. Okay, so now you start your afternoon trading session from 1:13 p.m. Okay, so if you are anticipating, if your daily bias is bullish, okay, you should see some level of sell side liquidity be smashed, be taken out. Okay, to go higher. Okay, and if you are expecting a bullish day, your high probability setup for entries will be below the opening candle of the day, below the opening 12 a.m. New York midnight opening candle. Your high probability setup will be below or close to it. Okay, so that's where you want to get your for your buy, for your bullish days. While for your bearish days, your high probability sell entry will be above the opening or close at the opening candle 12 a.m. New York time. Okay, so that will be your high probability setup. So now that is how to get your that is how you get your order flow, and you capture the daily range on a daily basis. Okay, so I hope you have found this video helpful and insightful. Please do well to subscribe to this channel, like this video, and if you got any question, kindly leave a comment below. Okay, so guys, what I'm actually doing right now, I'm working on I'm working on I'm thinking of bringing this community together, thereby I'm going to create a telegram group for us, for this family, and in that way we get to interact with each other more often, and we get to sit and look at the charts together on a weekly basis. Okay, so what I probably do every weekend is that on each video I create or I make on every new week, I probably share my thoughts on what I think price is going to do. Okay, so before this whole move happened right here, I talked about it. Okay, I talked about it in one of my previous videos. Okay, so now for this week, probably we are still very much bearish on the weekly time frame, but this is more like a retracement, and we are still below the discount, we are still below equilibrium, though this week might likely see price trade into the premium sector of this whole range. Okay, so one price trades above this old high, okay, we might likely see price continue going higher, because once price trade above this hold high we start pulling out quickly. Okay, that means that is like a break of market structure, and we might start seeing some bullishness on some actual bullishness on e-mini Nasdaq futures. Okay, but right now, although I'm just seeing this as a retracement to go lower and take out, probably attack this old swing low right here. Okay, so but before this move happened, I talked about it in one of my previous videos. So right now my opinions on this is that I want to see price trade above, trade above this old swing high, okay, on the daily time frame, which is this. Okay, so price is currently bullish right now, and on the daily time frame is currently bullish. On the weekly time frame is still bearish, but we are currently retracing upwards. Okay, this might just be a reversal. So that is that for that. And if you really want us to to be looking at the charts together, just like I have suggested, I'm thinking on creating the Telegram group for all of us. Okay, but I'm going to do that once we hit 200 subscribers. So guys, let's get there, and let's get this journey started. I'm excited, and I'm actually happy on on creating this content, because this way I get to learn fast. I get to teach you and teach myself as well. Okay, so that's just the main purpose for this channel, is to learn. Just I'm learning just like every one of you out there, and I hope to see you all at the top. Okay, so have a good day and good trading. See you on the next video.